Hi everyone, I'm Connor, and this is What's Trending on YCharts. Every month, we tell you which stocks, funds, and econ data are getting the most clicks so that you can stay on top of current trends and help your clients do the same. Today, we're talking about the PE ratios of Tesla and the entire S&P, Shopify's massive 50% drawdown, and ARK versus the world, / active versus passive investing. If you'd like some details on how we collect this data and links to each of the stories we'll be discussing, check out the description below this video. And now, let's see what's trending. So let's see what's trending in the world of company and stock data. We have the PE ratios for Tesla, NASDAQ Inc., Apple, Microsoft, and Amazon. They've all been popular pages as a lot of tech and consumer stocks have sold off to start the year. In addition to those mega caps, we also see NVIDIA breaking the top 10 as really all of these names have sold off amid high inflation and some hawkish signals from the Fed. But let's drill in on that Tesla PE ratio. Probably hear a lot about Tesla and maybe you're pretty tired of all the Twitter antics, but this chart showing total return price and PE ratio is actually really cool. It shows what I'm calling the three phases of Tesla's PE ratio. Phase 1 lasted up until July 2020. Tesla didn't have positive earnings up until that point, so the orange line isn't even appearing yet. Phase 2, from July 2020 until early 2021, during this time, Tesla's share price went into insane mode, like a Tesla does, but its PE rose to 1,400 because earnings were still relatively low and relatively flat. Phase 3, since early 2021 through the present, Tesla earnings have been strong and growing stronger. So even despite its share price climbing to record highs, that PE ratio is now near an all-time low. Now let's turn to the hottest company pages that are trending on YCharts, those with the largest page view growth month over month. Netflix makes the top 10 list after some disappointing subscriber growth numbers led to a sell-off. Shopify and Peloton are on a similar fall from grace all their own, and we see some blue chips like JP Morgan, Ford, Microsoft, Berkshire Hathaway, and Alphabet rounding out this list of hot company pages. A lot of these are high flyers, and they've had a rough couple of months, but none worse than Shopify, which is down 50% since November 2021. So let's take a closer look at the Canadian e-commerce giant. Here I'm using a scatter plot to tell this story about Shopify. This is one of our newest tools on YCharts, so if you haven't already, head over to YCharts.com and start a free trial to start playing around with scatterplot yourself. Now, on the x-axis, I've added a 1-year trailing total return, and on the y-axis is a 1-year trailing max drawdown. So each dot here represents a snapshot of returns and drawdowns over the past year as of each quarter over the last 5 calendar years. Darker dots are more recent data, and shaded or hollow dots represent data further out in the past. And this really shows the huge risk and reward relationship that a lot of Shopify investors are probably familiar with at this point. I mentioned they're currently on a 50% drawdown, but it's actually not the first time. That outlier near the top of our scatter plot shows that heading into 2016, Shopify experienced a 52% drawdown, but actually went on to finish that year up 66%. So presently, after nearly tripling in value from pre-pandemic values, this 50% drawdown has certainly taken a big bite out of those gains, but even if you bought Shopify right before COVID, you'd still be up more than 50% right now. And now on to what's trending in mutual funds and ETFs. At the top of the list are Grayscale's Bitcoin and Ethereum trusts. Their discount or premium to net asset value pages get really popular whenever there's a lot of action in cryptos, as there has been. And from there, we see a mix of Spider S&P 500 ETF, Invesco QQQ, and ARK's Innovation ETF. Now, because Cathie Wood is probably the most popular active investor out there right now, let's take a closer look at ARKK. And we can call this chart the ARK arc. Since the beginning of 2020, ARK is up 52% versus 47% for the S&P and 75% for the NASDAQ. Sure, ARK is bleeding right now, and lots of people think the sun has set on Cathie Wood, but if as an active manager, your goal is to beat the market, ARK has been doing its job, and especially over the long term. To me, this tells a layered story about active versus passive investing, which is active fund managers can sometimes be really right, and the next day they're really wrong. And the same goes for a relatively active investor in one of these active funds. An early ARK shareholder may have locked in those massive gains in early 2021, but if you were late to the ARK party or if you held a little too long, you might be down bad and it's only getting worse. All in all, this proves that timing the market and picking stocks is really hard. It's up to you to decide if it's even worth trying. Next, on to the hottest fund pages over the last month, with the biggest page view growth, more from QQQ. We also have the holdings for the BlackRock Science and Technology Trust, Global X NASDAQ 100 covered call. Its dividend value and dividend yield pages were trending, and this is a popular ETF for smoothing out volatility and getting some current income in your portfolio. We have more from ARK Innovation ETF, the iShares Core US Aggregate Bond, AGG or AG, and again, the discounted premium to NAV for Grayscale Bitcoin Trust. But let's take a closer look at BlackRock's Science and Technology Fund, BST. This might be a cautionary tale about know what you own, because despite its name, BST's number one holding is actually a BlackRock mutual fund, the Liquidity Treasury Mutual Fund, and it's about 5.5% of BST's overall holdings. It's that super flat orange line at the bottom of this chart, and that allocation may have held BST back as Marvell and Apple have really taken off. But in the last month or two, things have reversed. Maybe that allocation to this treasury fund has also been a saving grace for BST as its top holdings have been selling off. Now, BST's prospectus says that it will always invest at least 80% of its funds into equities. And that's why this fixed income fund can exist as a holding in what might appear to be a pure equity fund. And this is, again, more proof as to why it's so important to know what you own, when it can help you, and when it can hurt you. And finally, let's look at the trending econ data on YCharts. At the top of the list, for good reason, the 10-year Treasury rate and 30-year mortgage rate, both very popular as the Treasury rates are rising and mortgage rates recently set an all-time low. Bitcoin price and Ethereum price also both made it in the top 10. The CBOE equity put-to-call ratio and the US inflation rate. We also see the 10 to 2-year Treasury yield spread, the S&P 500 PE ratio, and the EU natural gas import price. Now, if you think gas prices in the US are expensive, look up this one on YCharts for a little surprise. And finally, we have the hottest econ data pages trending on YCharts, the S&P 500 total return, PE ratio forward estimate, and the Shiller-Cape ratio, the cyclically adjusted PE, were all trending. So was the 10-year Treasury rate and the 6-month bill down at the bottom of this table. We also have AAI Sentiment Survey, the American Association of Independent Investors, U.S. Investor Sentiment Bull-Bear Spread, and a weird one, but it makes sense given the cold weather, the Connecticut residential heating oil price. If you know anyone in Connecticut, maybe send some extra blankets because their gas bill is probably nuts right now. Now, if you remember when we talked about Tesla's PE ratio, I mentioned how its price has shot up, but the PE ratio is still falling because of strong earnings. And the good news is that appears to be largely true for all US equities. The S&P 500's PE ratio went wild when stocks rebounded so quickly after COVID. That's that dramatic purple spike on our chart. But strong corporate earnings have caught up with prices in the time since. The S&P 500 set an all-time high at the end of 2021, but its PE ratio was actually right near 2016-2017 levels as of Q3 of last year. On a forward-looking basis, the S&P PE ratio is expected to decline even further through the end of 2022, which might be a calming sign if you've been worried about overvaluation. We hope you've enjoyed this review of what's trending on YCharts. There's been a lot of selling off to start 2022, but corporate earnings remain relatively strong, and that might be a sign for optimism. Still, watch out for inflation and those pesky Fed rate hikes to come this year. Subscribe below to check out our next What's Trending, and let us know in the comments which names you're watching in 2022.